everyone. This is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. Don, how's it going?
Good, John. Looking forward to it.
Good. Yeah, we've got an interesting one today. Post-transaction, Silver47 with CEO Galen McNamara in just about 5 to 7 minutes. And we'll talk to them about their plans for the future with that new, formed company. I took a look at their presentation deck, pretty interesting. So thank you for the introduction here, Don, on that one. Hey, let's talk macro for just a few minutes here. A lot's going on, obviously. Jackson Hole, Wyoming kicked off today. A lot of volatility as the speakers were going, some hawkish, some dovish, but the overall end of the day here finished very strong going into Powell tomorrow morning. Do you have any thoughts on what that may look like, or what the fall looks like? I know we've been talking about it on past interviews.
Well, I've been saying that, I've been saying a lot of things, but one of the things is I think that the tariffs are going to be the trigger for the recession, and the tariffs are going to cause inflation. And so, Powell's kind of squeezed here a little bit. PPI is high, and PPI is going to lead to more inflation. It's undoubted. So he's not going to get his 2% number, and the economy is slowing. So how does he kind of balance that out? I've always said that they're trapped here. They can't prevent a recession. Has always been what I've been saying. And then when the recession comes, it's going to be a lot more dire than people expect. So I think it's kind of right around the corner. I was listening to Andy Schectman yesterday on Adam Tacker's show, and man, he was dropping some big, serious truth bombs on both the LBMA and the COMEX on how much gold and silver have been just flowing out of those exchanges. It's like something's definitely changed, and I'm starting to feel that too. Today, GDX was up 2 points today. It's up 75% for the year. I'll repeat that: 75% for the year. It's a big move, and we're not even done yet. It's possible. I mean, if gold closes the year above 3,400, it's going to be above that number, and I think that's where we're heading. And so the miners are having a really strong year, and really, it's a niche. I mean, very few people are involved in this. I tweeted out a chart yesterday saying that I think that $34 silver is going to get retested here when this correction comes in the market. Michael Oliver said, look out for 6,100. That's his number, his breakdown number. We're at 63, 68. So we're well above 6,100 here, but I think we're going to get below 6,100. And Oliver says, look out, kind of we go below that. But I'm very bearish the economy because of tariffs and inflation and debt, all these problems, right? We could talk for hours on it. But I'm just waiting for it to happen. But I do think silver will retest 34 when this happens. So, I mean, silver's at 38. Everybody seems to think it's just going to go higher. I don't think that's the outcome in the near term.
Okay. So, yeah, we look at the Fed as a very big component. We also look at what you were talking about there with CPI, PPI. The PPI read last time was off the charts high. And interestingly, the Fed will get another look at CPI, PPI, and non-farm payrolls before their September 17th meeting. So I don't think Powell has to go out on a limb tomorrow. I think he's going to talk a little bit more about the same old, like we're going to be data dependent and, see what happens. And so I think, as you and I have pointed out on our shows most recently here in August, that August 1st non-farm payrolls miss was huge. And we've seen a really nice move in the miners ever since that, because it wasn't just the headline miss, it was the revisions down on the 2 previous months. I mean, it's infinitesimal job growth right now. And when you look at what's happening with Trump in our sector and how it relates to our sector, that executive order in March was huge. He followed it up in April and May with doubling down on, Fast 41 and other programs that will help miners. We just talked about Paramount Gold, PZG, who is part of Fast 41. You just upgraded PZG this week to your favorites list. Stock has really responded since our interview at 66 cents. It closed at 85 cents today on huge volume. So we're seeing some really interesting things happening. I emailed you overnight from one of my other guys that I follow, John Newell, who wrote up Triumph Gold actually right after we interviewed them, TIGCF, and Triumph was, he thought, a breakout over 34.5 Canadian, which is right where it closed last night. I think it closed there again today. So you're right on the precipice with a lot of these stocks. And when they break, they're breaking violently higher in some cases. So it's really exciting to see, CEOs get paid off here, clients, of course, investors getting paid off, more importantly. But we've all had a difficult time, right? I mean, 2012 to now is 13 years. This isn't something that is a small amount of time, because look at what else has happened, right? You've got Bitcoin raging higher during those 13 years. Real estate has crushed it in the last 5 to 10 years. There's other asset classes that are performing well. So as a mining investor, you get frustrated. It's just natural, right? And now we're starting to see some light at the end of the tunnel.
Right. Yeah, and it's never a smooth ride. These things never go up in a straight line. A lot of people are jumping in here. The bull's going to have its way. The bull's going to do some bucking. Expect volatility. It's never easy.
Yeah.
Yeah, you got to believe. If you don't believe, you're going to get bucked off.
Yeah. And for our listeners, because both Don and I come from more of a value perspective, one of the things you could do is buy in August when people are not paying attention in general. And secondly, buy November 15th through December 29th when there's tax loss selling pressure. Every single year, I go out there on a limb and I say it's going to be another year of tax loss selling pressure. And I get Dave Erfley and a lot of other guys telling me, no, that's not the case. It's different this time. No, it's not going to be different this time. It's the same every year. People will sell, and you will be the beneficiary of that if you're out there with bids, one bid close to the action, but one bid way away, like 10% away from the action, because you get crazy selling. When we interviewed
Yeah.
Paramount Gold the other day, 200,000 shares traded in seconds. Some rookie trader just blew it out from 71 down to 67 that day. So, I mean, that's on an Amex stock. What happens on a lightly traded OTC stock, right? Like, you have plenty of vol, as you pointed out. Velocity is high going into the fall, I believe. So there's a lot of opportunity for investors still. So don't get frustrated if you're listening and you missed your stocks. Just put limit orders out there, and just move them up when you have good days, because you're probably not going to get filled on good days like today. But just keep adjusting them. It takes a lot of work, but that's one of the things that we teach our investors. If you're interested, we'll have our information on fennecconsulting.com at the end of this presentation. But why don't we bring Galen McNamara on right now, who is the new CEO, or sorry, the CEO of Silver47, the newly formed Silver47, when Suma and Silver47 came together here just recently. Welcome to the show, Galen.
Hi, gentlemen. Thanks for having me on. Good to be here.
Yeah,
Yeah, of
welcome,
course.
Galen.
Thanks.
So would you be kind enough to give us a 7 to 10 minute overview of the company, please?
Yeah, absolutely. I'm just going to share my screen here so I can put up a deck and have something to speak to, as I always find that's helpful. So, yeah, Silver47 is basically a brand new silver company that was formed from two other junior explorers, one of which I come from as the former CEO that your listeners and viewers may be aware of, called Suma Silver. And the other partner was a Silver47, which is a fairly new listing, listed in late 2024 with an asset in Alaska. And the high level idea here, like, why do we do this? How is the sausage was made? Speaking from my perspective as the former CEO of Suma Silver, which was a company that I founded in 2020 with the idea of going into these historic, like Wild West style American mining districts that in their day really drove a lot of value for that part of the world and shaped, places like Nevada, in a way, but like really they were prolific past producers, but haven't seen much or any modern exploration until we started working on them. And I'm a geologist by trade, and I just saw so much value in those places because we have tools that the old time miners and old time prospectors just didn't have, as good as they were, and they were very good. Modern drilling technologies, modern drilling methods, modern just 3D software to help do our geological models. And no need for me to get too far into the weeds on that, but it's certainly game changing in data rich, mature exploration spaces. And so what we did was over several years is we had two projects, one in Nevada and one in New Mexico, where we just systematically built ounces over time. Came out with two resources totaling 78 million ounces right at the beginning of this year. And like thought, hey, look, like we can just keep doing what we're doing. We can keep drilling out ounces for probably less than 25 cents an ounce, which is a great value proposition, but that takes time. So the other way for me to grow, and I'm an impatient person in general, but so obviously the other way for me to grow is through M&A. So we started talking to Silver47 and Gary Thompson, the CEO of Silver47, in about January, and just there was a very quick meeting of the minds. Like, is this something where we can add our silver rich facing projects together in the U.S. and is 1 + 1 going to equal 3 or 5 here? And we thought, hey, our chances are pretty good. So he had Silver47's main asset, which is our flagship, was 168 million silver equivalent ounce deposit, VMS deposit, massive sulfide deposit in Alaska. That I thought to myself, and I think it's fair to say we thought to ourselves, well, we want to build a silver investment and exploration vehicle here that's focused on U.S. ounces, especially at a time when domestic mineral production has re-entered the national conversation in a way that is just so important. We've got issues where we get most of a lot of our things that we mine from places that may not be really close allies or from the third world, and that's really not the way that I think anybody needs to be, and it's just not in our best interest for a national security perspective, from an ethical perspective, et cetera, et cetera. But I digress. So we announced the deal in May, closed it on August 1st, and here we are. So, to summarize the assets and what we're sitting on here, the idea here is to create a really high-grade U.S.-focused silver developer. Right now, pro forma, there's 236 million silver equivalent ounces in the inferred category, an additional 10 million silver equivalent ounces in the indicated category at about 330 grams per ton silver equivalent. Company-wide, the precious metals concentration of that, gold and silver, is between 55 and 60%. But we're really thinking bigger here. And speaking as a geologist, like our high level, big picture goal is to move this towards 1 billion ounces, either through drilling out the deposits we have. And I think that's very possible just based on my professional experience. But again, that takes time. Or finding additional like-minded potential partners for us to continue the M&A cycle with, primarily in the United States. The other thing I like to point out is that, hey, look, I think we're undervalued relative to our peers. And sure, every company says that. But on an EV per ounce basis, and I'll just switch to the next slide, we get about 27 cents per ounce US EV in the ground for our resources. Compare that to some of our peers at similar stages on the right side of this slide. And look, they all get between, say $1 and $2 an ounce, roughly. So I think there's a clear argument to say that we're undervalued just based on that, but we're not just kind of sitting here and saying, okay, we're undervalued relative to our peers, so therefore, please invest in our company. No, we're out there pretty aggressively right now. We're drilling in Alaska right now, trying to both grow the resource, grow the tonnage, but also grow the high grade portion of the current resource, number one. And we have a project pipeline now that we can have year-round drilling. So we can go down to the lower 48 after freeze up in Alaska happens and we stop drilling in the next 2-3 weeks, and rotate down and just continue to add ounces on our projects in Nevada and New Mexico, with the idea though that the Alaska project really is the flagship, and that's the one that's most advanced. That's the one that has great exploration potential as well. But walk that through updating resources and potentially PEAs within the next couple years. And then just the last thing I'd like to point out on this slide for people that are interested in drill results, and this is just a really simple observation, the best projects have the best drill holes. So in Alaska, we look at things like 36 meters of 672 grams per ton silver equivalent. But down in the lower 48 in Nevada at Hughes and at Mogollon in New Mexico, you get some really, really thick high grade intersections like 18 and a half meters of 536. And in New Mexico, 31 meters of almost 450 grams per ton silver equivalent. So just when I evaluate projects as a geologist and really a prospector at heart, I see things like that, and I know those are big systems that should have big deposits around them. So that's it. That's happy to answer any questions, guys.
Okay. Thanks, Galen. So when you on the previous slide, you talked, actually this slide here, you talked about 246 million silver ounces with a goal of 1 billion ounces. I mean, those are huge numbers. We had Aftermath on a few months ago, and they were probably around 140. And I personally just interviewed AgriSilver off our show about a month ago, and they're at 350. I mean, these stocks are very ownable, I think, because ounces in the ground matter. And, both of those have, I think, more challenging jurisdictions than you do. Obviously, Don and I both live in the U.S. We like the U.S. as a jurisdiction. So I guess the concern I would have just looking at this slide would be if you're going towards 1 billion ounces, which is a huge number, would you consider not doing that to kind of retain the share structure, which we should also probably talk about?
Yeah, you know what? I think that really there's a balance there, right? When it comes to growing ounces, you can either do it through acquisitions, right? And then it's like, okay, you combine one group of shareholders with another group of shareholders, and are we better off collectively than we are apart? So that's something that I would look for in some kind of additional transaction when and if we get there. And I think this one so far has proved that, at least for Suma Silver and Silver 47, the answer is yes. And then if you want to do it by growing, so I ask myself, by growing internally and drilling these out, I ask myself, okay, well, how much is it going to cost for us to drill each ounce, right? And if the number, so far we've been at about 25 cents from the Suma Silver side, if we can stick to that number, I think that's a pretty really good value proposition for my shareholders at $40 silver or $38 silver, where we're at right now, number one. But number two, we also have to really think about market conditions and access to capital, when you have to go out and raise this money from investors to deploy into the ground. And you guys, you talked about, hey, it's been since like 2011 since we had, some good times in this space. And from my perspective, as an executive geologist and was working in the field, like that to me felt like 40 years in the desert, really. So, but during that time, there have been windows where we have been able to go out and, if you're careful, raise at I think levels that make sense. So it's not really a straightforward question, John, or a straightforward answer. Excuse me. It's a very straightforward question. It's something that I really have to work some nuance around to make the best decisions that I think are going to be in the best interest of my shareholders.
Yeah, I understand, and I don't mean to put you on the spot. I mean, I've known both of those stories. I've known both of those stories for 4 or 5 years, and I've seen what Minneotis has done at AgriSilver, where he basically has just been very methodically growing ounces, but he hasn't done it all at once, right? Like if you looked at the story 2 years ago, they didn't have Puerto, they didn't have Kinross, they didn't have any JV partners at all, and so they had to be more careful, And so as time progresses in a bull market, which I think we're in, at $40 to $50 silver, this gets really interesting already, with this many ounces. But if you were to grow even larger, I mean, it's like crazy interesting. What's New Mexico like as a jurisdiction? I'm pretty familiar, like with Alaska and Nevada, but what is that like from a cost perspective? Are there any issues that don't, that the average investor may not be aware of?
Yeah, so I'll start from a cost perspective. We're explorationists, explorers in the United States and anywhere. We're feeling the pinch of inflation, just like anyone else is. But again, I justify that by it coming back to the discovery cost per ounce. And then in New Mexico, we've been working there since 2021. It is a historic mining jurisdiction for sure, a mining place, and lots of uranium came out of there. And And I know there's lots of companies looking for uranium there. There's two large open pit copper porphyry mines within 50 miles of where we're working. And so far, our experience there has been very positive. We certainly focus on community and permitting, just like you would when you're working in any place, and especially any first world place. We're a little bit advantaged there, or blessed there, in that where the majority of our work is occurring, where we want to build a critical mass in terms of ounces on that project, is on private property, historic patented mining claims that some of them go back, I think, to the 1880s. So that actually really makes a big difference for us from an operating perspective, but hopefully from a future permitting perspective as well.
Okay. Don, I'll turn it over to you so we have enough time.
All right, great. So right now, is your cash balance $3 million, or what is your cash balance?
No. Let me just scroll down to that. So we're at a working cap when we close this transaction of about 12 million, and when I say that, it's cash minus accounts payable, and then we're currently in the process of running a $4 to $5 million drill program in Alaska. So after that's over, 12 minus 5 is probably in the neighborhood of 7 million.
Okay, great. So the way that I see your company, what I would like to see as an investor, I am a shareholder, is for you to drill about 10 million a year, which is kind of, you have that right now. So you have about $100 million fully diluted market cap.
Correct.
Yeah, it's 102. So 10% is 10 million. And then find more, and then your market cap doubles. It's kind of my expectation. You get to 200 million, and you only have to dilute 5%, and you're in good shape. So, I mean, that's how I like to see it. I mean, if you're diluting 5%, that's fantastic, and 10% is acceptable. And so, yeah, I mean, I want you to drill at least 10 million a year, and you have three really good deposits to drill, right? I mean, all three of these are going to grow in size. They're all mines in the making.
For sure.
So that's kind of what I want to see. Insiders, management owns 10%. How much do you own?
Yeah, management owns 10%. I own not as much as I would like. Between myself and family members, I'm probably at 2 million shares. And you know what? Like, that's probably something that's a holdover from the last company, right? Because my position comes from the start of Summa 5 years ago. So, but you know what? Like, position is good. I've invested probably since Summa started, probably a couple $100,000. And my motivations really are, like, I'm a prospector at heart. I'm a geologist. I love working with good people on good projects, and that's what we're doing here. That's like my main motivation professionally. So that's what really kind of keeps me going on this.
Yeah, I'm glad the slide is here, because my first few questions are all about this slide.
Yeah.
Insiders, we're showing Eric Sprott and management insiders at 22. But how many additional insiders would not want our long-term investors, kind of like an Eric Sprott camp? How many like institutions or other insiders that you consider kind of long-termers?
I think, all of that 10% for sure, completely long term. And I think those are reporting insiders. So it's like to the letter of the insider definition.
Right.
And then in terms of institutions, the vast majority of it, absolutely. I think we have a unique opportunity here that some institutions are starting to get, and we're going to go out and market it aggressively.
Yeah. So where this really becomes important is you have three different ways to monetize your projects. And so, I mean, and one of the ways is people are going to make phone calls. As soon as silver gets to $50, you're going to start getting phone calls of people wanting to buy one of your three projects. Which one can we buy, kind of thing.
It's starting now.
Right. So, yeah, well, you can imagine when it gets to 50, right? But I want you to basically say, sorry, we're not for sale. I don't want you to sell below $2 an ounce in the ground, because I think we're heading to $100 silver. So if you sell below $2, you're kind of giving away the farm, in my opinion. And so you're currently 236 million, but I think that doubles easily. So we get to 500 million ounces silver equivalent at $2. That's a billion. So that's a five bagger. I think that's kind of the minimum valuation I put your company on. But the key is going to be how you monetize. That's the one.
Yeah.
The one unknown that us shareholders have to deal with. So you can either spin out one of your projects, which you probably won't do because you just put all three of them together. So you're probably not going to do a spin out. Even if Red Mountain starts getting these massive holes, you still probably won't spin it out. So you're either going to JV or you're going to sell. Now, the one model that I really like, but nobody uses it, it's the only model I think that works, is what I call a 50-50 JV. So what you do is, like, you take a project to construction ready, and then you basically find somebody to build it. You find somebody to pay half the capex, and then you get 50% of the free cash flow, and then you just rinse and repeat. That's the only model I think works. Nobody's doing it. I've been waiting for somebody to do it. But I mean, that's something that you could do. I mean, now it takes more money because to take these projects to construction ready, it costs a lot of money. But in the long run, the hard part is doing the first one. But once you do the first one and you start getting the free cash flow, from that point forward, it's easy peasy because then you're self-funded from that point forward. It's that first one that's a pain in the butt to do. You guys probably won't do it. But what I see happening here, I mean, monetizing these three projects, is you'll probably sell them piecemeal, one by one, or you're going to sell the whole company. But whatever one is the most economics, probably the one to go first. And then your shareholders, so basically all you do is your shareholders are going to get paid for that one project and then get the other two projects, as a spin out, right? And you just carry on. 1, 2, 3.
Like Silvercrest did that. Silvercrest 1 to Silvercrest 2. Yeah.
So 1, 2, 3 projects. And then if they all get valued at the kind of where I think they're going to get valued, shareholders will benefit really good. So I see this as a pretty solid 5-bagger with kind of 10-bagger potential, depending on what you find and depending on the valuation of silver in the ground. Now, one thing I expect is, I always say this, is that every 1 million ounces of silver production is worth $400 to $600 million. Now, people are going to catch up to me on this valuation because nobody's expecting $100 silver. But once we get above $50 silver, then it'll be, all silver has to do is double. At that point, it's becoming feasible. So if you produce 1 million ounces of silver at $100 silver and your break-even cost is $50, which is very conservative, you have $50 million in free cash flow. So if you get 10x on your money or on each one, if your valuation of your company is 10, it's 500 million. If it's 8, which I think is very conservative. So if we're having those kind of margins, $50 margins, the probability you're going to get 10x value. So that's $500 million per million ounces. So if you start thinking about that, if you take $500 million, 500 million ounces is where I think you're going. That is 20 million ounces a year. So 20 times 500 is $10 billion. So your actual valuation of your company is actually 10 billion if you put them all into production, which you're not going to do. But
sure.
But that's kind of what you're sitting on. You're kind of sitting on $10 billion. But then you monetize the 10 billion. Now the 10 billion is what everybody else wants to get their hands on. They want to get their hands on that 10 billion and they got to pay for it, right? So if you can sell it for 2 billion, which I think is possible, then we get, a really good return. Let me see if I can ask a question. I've been talking the whole time. I guess my question is, what is your 3-year plan?
Yeah. That's, that's an important one because we have projects, and like, how do you really balance the capital that goes into each one. Well, certainly right now, Red Mountain and going forward is our flagship. It's the one that's most advanced with 168 million silver equivalent ounces. So that one right now, that's the one we want to first walk through, front and center through the development path. That includes likely an updated resource. And if that looks good, and I think and I hope it will, that will lead into a PEA and further studies, over the next, say, 1, 2, and 3 years. But at the same time, we've got these other projects that we can add value to in not in the background, but while we're not drilling at Red Mountain, we can still have that good news flow from Mogollon and from Hughes. And there's another project called Kennedy that I'm looking forward to talking to a little bit more soon. It's got a bunch of high grade at surface. But again, I digress. That we can really, what's the word I'm looking for, bounce the development story at Red Mountain, which if we agree with the Lassonde curve, when you go into development, things from a news flow front kind of slow down, and sometimes there's a depression of the stock price, fairly or unfairly. If we can bounce that against exciting drill results from our other projects, I think that's a recipe for us to hopefully add fuel to the fire on our stock price in a time when silver and gold are really going to come back into vogue in the US.
Okay, so if you find some really good drill holes on your next drill program, you update the resource, it grows by, say, 10%. If it grows by 10%, that would be substantial because you're starting at a very high level, right? Let's say it grows by 10%, which is, I think, pretty conservative. And then you do a PEA that has a very huge NAV on it. At that point, would you start to permit the project?
Yeah, absolutely. You would start to walk that path for sure. Because that PEA, that potentially could really show you what value you actually have in the ground. And once you have that, then you absolutely must start the permitting process while you do something that's bankable, a study that's bankable or pre-feasibility study, right? And you run them in parallel. And it's just, you really have to start that early. You have to do a bunch of things in parallel.
Yeah, you just made International Tower Hill look really, really bad.
Oh, well,
so
my
International
apologies
Tower
to them.
Hill, yeah, their Living Good project that has, I don't know how many million ounces, but that project, they haven't started permitting it yet. The permitting process is going to take 4 to 5 years, and they haven't even started it yet. So so I really like the way you answered that question. Of course we would.
Yeah. Well,
it blows my mind that they never thought of permitting their project. It's mystifying.
Well, I mean, I don't want to throw anybody under the bus here, but the best thing to do is start building relationships with the stakeholders, and that includes, the local permitting regulatory authorities and the people there, so you can start to understand what you're going to need to do and start to build the consensus, and then just start doing it from the smallest things, like the wildlife surveys that you need to do. Start them, do them.
Yeah, and especially if you want to sell the project, you want to get it as far as most as you possibly can.
Yeah.
So let me see if I have one more question for you. Is there any possibility you would do a JV, or is that kind of out the question?
You know what? That's not doing a JV isn't my focus now. It's not our goal as a company between myself and Gary Thompson, the chairman. But I think we're both open-minded in that, we'll look at any opportunity that's right for the shareholders based on the market conditions at the time. But right now, our goal is to build towards that billion ounces, and like JVing things out or vending things out kind of like is the opposite of that.
Okay. That's kind of what I want to hear. Okay, John, I'm good. Thanks for your answers, Galen.
Thanks for your questions.
Sure.
Great. Well, Galen, thanks a lot for joining us today. What we'd like to do is just summarize for our investors. So if you wouldn't mind just stepping away from the camera, that would be fantastic. Yeah. And we hope to see you at one of these upcoming conferences that Don and I are attending this fall.
Thanks, gentlemen. Thanks for your time and great questions.
Yeah, I'll see you at Beaver Creek. I have a one-on-one with you.
You know what, Don? I'm going to be on baby watch for Beaver
Oh,
Creek. So our VPIR, Jordy Belfiore, will be there and he can give you the real-time update.
well, that might be better because then if he's not aligned with you, I'll basically go after him, right?
Yeah, sounds good. Sounds good. Thanks, gentlemen. I'll sign off.
Thank
All
you,
right.
Galen. So, Don, would you be kind enough to give a summary for us?
Yeah, I mean, this is an optionality play. I mean, he mentioned it, 27 cents in the ground for EV, plus they're going to find more. So you're getting a good price, if you will, for optionality. I like optionality. That's the main place I invest in exploration is optionality. The only thing that really bites you on optionality is if they sell too early or if they do a JV. And I don't expect them to do a JV anytime soon. I really liked what he said about Red Mountain, about doing a PEA and starting permitting. I think that's the smart thing to do. I think Red Mountain's going to be worth a lot of money. I do expect them to sell these projects one by one. That's probably the best way to help your shareholders. It's possible they could sell the whole company at once, but they might not get what they want for it. It's going to take a while to drill all these. I mean, I like what I heard. I mean, I think they're going to spend 5 to 10 million a year drilling. They're going to add ounces, and those ounces are going to be very accretive. So, as an optionality play, I see this as a 5+ bagger. So, I like it. I like the locations. Um, yeah. So, yeah, I'm a fan.
That's great. Yeah, I like it too. I love the jurisdiction. Obviously, we aligned ourselves with U.S. based mining companies last summer when Trump crushed Biden at that debate. I just didn't think there was a possibility that any Democratic candidate would win, and we went all in on the U.S. that summer. And we've been adding a lot more to stories in the U.S. because Trump just keeps, showing support. Right, like the March EO was huge. April and May follow up was huge. Now August 13th, he's like, "Oh, here's $1 billion for critical mineral support." Like this guy is really doing a great job for the mining sector, and we
Yeah.
are infinitesimal compared to other sectors. We're at
Yeah.
point. 1 second, Don. I just wanted to say this: less than 0.1% of the S&P. That's us. Technology, 45.4% as of August 15th. So we have a long way to go. There's going to be a lot of cash thrown at our sector in the next 1 to 2 years, in our opinion. And
Mhm.
this is going to be really exciting to see a company like Silver 47 with, nearly 250 million ounces of silver. That's why we've been kind of saying to these guys, Don, right? Like, don't sell cheaply because the future looks really bright.
I just wanted to add one thing about Alaska. You mentioned that Trump administration has been pro mining. Well, Alaska was pro mining before Trump got into office. These guys sued the EPA. The state of Alaska sued the EPA over Pebble. The state.
Yeah. Yeah,
They
no,
sued.
I
So
I owned
yeah, so
NAK. So
the state of it, yeah. So Alaska is probably the most pro mining state there is.
yep.
They want to support mining as much as they can. And so yeah, that's one of the reasons I like it too. And I like the Free Gold Ventures project. I really like all these projects in Alaska. I just think it's probably the most pro mining state there is. I can't think of one that's more pro mining. I would say Nevada, but Nevada's turning purple. As it turns purple, the Las Vegas, Clark County is like, is becoming somewhat Los Angeles, all the people from California moving to Vegas to Clark County. So over time, I think Nevada is pro mining, absolutely. But it worries me the fact that the state's getting inundated with Californians. So it's just a matter of time before, Nevada turns, it is purple already, but it could turn blue. And if that happens, then maybe Nevada's not the state that it once was, if you will. But I think Alaska
Right.
is going to be a pro mining state.
Yeah. I mean, I agree. I mean, Nevada, though, is still, as of the end of last year, the number one jurisdiction globally, right? So, like, it could go to the fifth or something and still be very meaningful. Arizona, where you and I live, I mean, we have our challenges here. It's not always a home run, for sure. But when you're out in the rural parts of these kind of states where you're not,
Right.
right near a major area, or wildlife is an
I,
issue, or there's First
yeah.
Nations issues. I mean, you've got plenty of upside, and so the nice thing about this project or this company is that they have three to pivot to, right? So if one has a problem, you've got two others to drill.
Yeah, I want to mention Arizona. The big problems in Arizona isn't the state of Arizona. It's the United States government, federal. It's federal stuff that have the problems. A lot of these big copper mines, it's the EPA that is the federal licensing that is the big problem for the big copper mines in Arizona. And the problems they were having in Alaska was federal as well. So, yeah.
It's like that in a lot of states, right? Like you and I interviewed last year with Dakota Gold. I don't know if you remember that. I brought it to your attention around $2. It's trading at $4 now. It's symbol DC. Bob Quartermain's involved with that. They're on private land. That's what got me interested. And then, of course, Quartermain. But I mean, the fact is, like, that does make a difference, and it accelerates the permitting process. So, yeah, there's a lot of things to look at. That's why you and I have a heavy lift in front of us with all the stocks that we track. But we try to do the best for our listeners, and we hope you enjoyed today, everyone. Thanks for listening.